Cunningham joined Bloomberg earlier this week to talk about that IPO market. Here's some of what she had to say.
Across the board, 2020 was a blockbuster year. We had more IPOs than more capital raised than in history. And then we saw 2021 already eclipsing those numbers. What's unique about this time and very different from what we talk about when we look back at the dot-com era is the breadth of types of companies. And so, as you mentioned, we're seeing internet tech, we're seeing consumer tech, we're seeing healthcare. There's so many different industries going public right now. As the markets have become a little choppier and we're seeing investors become more discerning about which companies they're supporting, the pipeline continues to be really, really strong. Some companies are choosing to wait a few quarters before they go public, but there's still a lot lined up in the short term. And we're excited to welcome Warby today here at the NYC via direct listing. They're also thinking about how they go public, not just when.
Stacey, I notice you're wearing your glasses. I feel this is appropriate. Let's talk a little bit about the direct listing. You say the markets are getting a little choppier. Does the direct listing become more attractive in choppy markets? Do you think more companies will go down this route?
That's a great point. We're already seeing more and more companies considering a direct listing. But when you're not pricing shares and you're not selling shares into the market, you're a little less concerned about what the market conditions might be. You're allowing investors to price the company, but there aren't new shares being sold. And so it is attractive when markets might be a little bit more volatile. We are seeing more companies choose a direct listing, not just because of market conditions, though, because of their priorities. So the cost of capital is significantly better in a direct listing because you're allowing the overall market to participate. And that democratization of access to that initial listing is a really big, important driver for many companies who want all investors to have a level playing field as they hit the public markets.
Hey, Stacey, I hear your point about direct listings, and so you're somewhat immune from the volatility within the markets in some capacity. But if we get the trajectory of like yields really rising and other assets really repricing for that, do you think that materially impacts the space?
You know, I think not so much for direct listings. It's just the capital markets attracting investors. And there are drivers for why there are so many companies looking to go public. If you rewind back to the spring of 2020, nobody would have expected that we would be in such a busy IPO calendar. But it was very expensive during that time in the early days of the pandemic to raise money in the private markets. And the public markets were providing access to capital to companies who needed it urgently, desperately, and they needed it really efficiently. And the public markets were really on display. So now we've seen a lot of companies recognizing the value of the public markets. Yes, certainly interest rates are playing a role in that as well. But there are companies that are looking to be public because they're not quite sure. I mean, we're coming off at a 10, 11-year bull run market where a lot of companies recognize the fact that conditions might not be within their control over a period of time, and they're looking to tap into that capital so they can continue to grow and expand their businesses despite conditions.
Stacey, we're starting to see some SPACs giving back money to investors. Do you think that is a sign maybe that peak SPAC is behind us?
I think peak SPAC is behind us. If you think about the days where we might have a busy day and there were 20 SPACs going public on a single day, I don't think we're going to get back to those levels. There's been a bit of a reset, which is healthy for the market. You're seeing high-quality SPACs go to market. You're seeing high-quality business combinations get done. But when there are already 400-plus SPACs out there looking for business combinations, I certainly don't think we're going to see an acceleration of those trends. And just like the rest of the market, investors are going to pick and choose the opportunities that they believe are going to deliver them the best returns.
That was New York Stock Exchange President Stacey Cunningham. Coming up next on Wall Street Week, contributor Larry Summers. This is Wall Street Week.
like China's growth because it is already slowing. Chinese manufacturers are curbing production. This is the latest shock to global supply chains, already delayed by, part delays, chip shortages, settled with soaring commodity prices as well.
Well, Haslinda, when we've seen a lot of supply chain disruptions at the beginning of this COVID pandemic, and then, supply chains became resilient and it really moved goods around, especially medical goods and supplies. But now, at this part of the pandemic, we are seeing disruptions again, and discontinuities. And that is because of what we spoke about, the demand that is pent up. And of course, if you have factories slowing down and, not being able to produce as much, that is going to impact growth and the recovery.
This is Wall Street Week. I'm David Weston, and we're going to turn to Larry Summers of Harvard, once again, our special contributor on Wall Street Week, to really take us through the week. Larry, first of all, let's start with inflation, something we've talked about, I think, every single week. But we got really some news this week, in no small way because of what happened with the 10-year yield on the Treasury, which really spiked up. It's still a modest number overall, but it climbed really quickly. And you and I have talked about the question, if we really have an inflation problem, why isn't the 10-year yield going up?
Look, it may be that this is a recognition of some combination of the fact that we're going to have more inflation and that the Fed's going to do more than people thought it was going to need to do in order to contain inflation. Once these things start, they sometimes have a tendency to trend. So I stand by my view that markets are substantially underestimating what's likely to happen to interest rates before too long. If you look at the so-called Taylor rules, predictions of Fed behavior, and you feed any kind of traditional Taylor rule through with the way current economic data is running, it points you to a pretty substantial concern about inflation overheating. So I've got pretty real anxieties. I think what's happening with oil makes the kind of parallel that I've drawn to the 60s and 70s look more real. We just seem to be having a lot of surprising bad shocks that are lasting longer than you think. And when you keep being surprised again and again, it suggests that there's a pattern and you're missing it. I think that's a bit the case with inflation. And of course, this week we saw some growing sense that while Europe is not nearly as far along in this as we are, that even in Germany, inflation's rising to surprising levels for them.
At the same time, we have a back and forth up on Capitol Hill about spending more money, more potential fiscal stimulus. This week we had Joe Manchin, the senator from West Virginia, come out and say, I don't like $3.5 trillion for this Build Back Better plan. I like it more like a $1.5 trillion. Now, I don't know exactly what's in Joe Manchin's plan, but I remember last week on this program, Wall Street Week, you said what you thought they should do is do something less than $3.5 trillion and make it more targeted. Is Joe Manchin taking the Democrats in the right direction, do you think?
Look, I think if the bill shrinks somewhat, even more important if it's paid for, even more important if it's paid for without gimmicks. I worry about too many things being done where they're funded for 3 years and everybody assumes it'll be funded after that, or it's announced right now that it'll start being funded in 7 years. It's crucial that there be some quality to the spending relative to the revenue, rather than excessive reliance on timing gimmicks. It is hugely important that we pass a bill. It is hugely important that we start doing more than we have done on climate change, for example. And I'm not sure that we need to do everything that Senator Manchin is calling for there. I think there's a lot that absolutely needs to happen, even if there is some short-term dislocation. So I'd like to see, I think it's desperately important that we pass a bill. I hope that this process of compromise will eventually get to an end. And I'm guardedly optimistic that at the end of a process that won't have been pretty to watch, we'll get something that may not correspond to some people's dreams, but will actually be a strong set of initiatives to invest in the future of our country that's more significant than anything we've done in a long time.
Larry, I wonder if you see a possible connection between these two things, inflation on the one hand and what we're doing with climate on the other that you just referred to. In this sense, we saw, for example, natural gas prices really spike up in Europe. We've got problems now in China. Is this something that is really going to stay with us on the inflation front? Because as we convert over to potentially zero greenhouse gases, there's got to be a cost.
I think that's a risk. It's a complicated thing, David, because if you reduce the demand for fossil fuels, that will presumably reduce their price, not increase their price. And that aspect of it will be anti-inflationary. But I think this is something we need to carefully monitor and watch. I think the time frames are somewhat different. The inflation threats are of things becoming a bit unhinged in the next year or two. The climate plans are things that will play out over quite a long time period. But it's absolutely something that we need to pay very close attention to as we set the policies going forward.
Another,
if I could just say, can I just add something on the
Please.
subject of the tax debate that we're having? I don't think it's going to happen. It would be fantastic, actually, if we were able to place some kind of tax on some kind of fee on fossil fuels, not laid directly at consumers, but placed upstream on the businesses that produce them. I think that would be probably the best public policy there, as the late George Shultz and I advocated several years ago. Beyond that, I do think that one thing Senator Manchin has said is absolutely right, and that is that we should be repealing much of the Trump tax cuts. There is no conceivable reason why we cannot have a 25% corporate tax rate in the United States without damaging competitiveness of U.S. companies. Costs of capital are near zero. It is not cost of capital that is inhibiting investment right now. This is something we surely should be doing. And on that, I am right with Senator Manchin. I'm right with the administration. I hope Senator Sinema, it's not clear exactly where she stands, and she studied all of this very, very carefully, but I hope she will see her way clear to support a carefully measured tax program that raises revenue we surely need from people who surely can afford it, without doing damage to investment.
Larry, finally, there's another item pending up on Capitol Hill. That's this debt ceiling. And everyone seems to agree, Republicans and Democrats, we're never going to default. At the same time, they don't seem to find a way to actually raise the debt ceiling without raising the specter. What do you make of that debate? And maybe as important, Larry, what do you think the rest of the world is thinking as they look at this?
Games of chicken are really dangerous. People who play games of chicken never plan to crash their cars and die, but occasionally they do. And that's the risk in this thing. And I hope people will find a way to recognize reality. There is no magic solution that is going to get us through this. Some 50 people in the Senate and 218 people in the House are going to have to take a vote that they would rather not take, but that there is absolutely no choice for our country to take. And I just hope we'll find a formula where that's done. You're already seeing the effect a bit in the Treasury markets on securities that are coming due soon. The longer this happens, the longer we look like a country that's having difficulty governing itself. And that's an important issue for our international perception. Most important op-ed of the year was written by Robert Kagan in the Washington Post this week, and it discusses how there's a real danger to American democracy from authoritarianism coming out of President Trump and many of his allies. And there is no responsibility, much more important than whether we have this size tax bill or that size tax bill, this inflation rate or that inflation rate, is that responsible officials find ways to marginalize that, I never thought I'd say it in the United States, authoritarian threat.
That certainly puts it all in perspective. Thank you so very much to Larry Summers of Harvard, our very special contributor on Wall Street Week. Coming up, one more thought. Getting investment advice from a small, furry rodent. That's next on Wall Street Week on Bloomberg.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
Finally, one more thought. Taking a random walk on a hamster wheel. We spend a lot of our time trying to understand the markets, explain the markets, even predict the markets. And we have no shortage of experts who can tell us what the markets are doing, at least in retrospect.
The bond and equity joint sell-off.
This growing anxiety.
We're trying to read the tea leaves.
People are just closing their eyes and waiting for this all to be worked out.
We basically entered a high volatility regime.
You've got a 10-year yield at 1.5%.
A steepening in the yield curve.
The Fed has said that they're changing policy.
They've telegraphed the tapering.
Delta fears have caused concerns.
All the pressure on Evergrande and Chinese debt markets.
You get volatility.
And now coming out of Germany, we get maybe a useful reminder about just how modest we should be about what we think we know about the markets. Meet Mr. Gox. He is a hamster. And like most hamsters, he spends his days pretty much running on a hamster wheel and running in and out of tubes. But his owner has set it up so that Mr. Gox can trade cryptocurrency. He does it because where Mr. Gox stops on his wheel points to a specific currency. And whether he's on the buy side or the sell side depends on which tube Mr. Gox goes in or out of. And we can all watch Mr. Gox make his investment decisions in real time because it is streamed on Twitch. And of course, Mr. Gox has his own Twitter account as well. And the results? Well, let's put it this way. Since June, Mr. Gox's portfolio of cryptocurrencies is up 16%. If you're keeping score, that's better than Bitcoin, better than the S&P 500, it's even better than Warren Buffett's Berkshire Hathaway. But on the other hand, if you watch carefully that streaming video, you notice something about Mr. Gox. He actually isn't so much a crypto trader as a crypto holder? Because most of the time, Mr. Gox is in his cage, not doing much of anything. He's not on a wheel. He's not going in and out of the tubes. So maybe, in one sense, Mr. Gox is a long-term investor. Does that remind you of anyone, like, for example, investing icon Warren Buffett?
I'm buying stocks, but I'm not buying them because I think they're going to go up next year. I'm buying them because I think they'll be worth quite a bit more money 10 years or 20 years from now. And I don't know whether they're going to go up or down tomorrow or next week or next month or next year.
So perhaps, maybe the German hamster, Mr. Gox, is one more follower of Ben Graham and Warren Buffett. That does it for Wall Street Week for this week. I'm David Weston. This is Bloomberg. See you next week.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
What have we learned from this evergreen crisis so far?
From my investment perspective, I think diversification is very important. So far this year, we see many events, right? Maybe in the fintech sector, and education, casino, and property. So I think diversification help you lower your risk on your overall portfolio.
Medium term, though, are you seeing more risk and reward in the high yield space in Asia? I mean, how are you viewing this right now? Are there actually buying opportunities given just the selling we've seen?
This time is a bit different in the property cycle because in the last, when you see there's a tightening measure, there's always demand there, right? Just the government trying to suppress the demand. But this time we're seeing a confidence issue, is like a buyer strike. Because of the sentiment, the evergreen is hurting the sentiment and people don't want to buy. And other developer, because they want to get cash.
I think that SPACs are very much here to stay.
You can trade anything as a trend follower.
When you think about Bitcoin, I don't think it's a currency.
Diameter is growing fast too, from $0 to $9 billion in just 4 years. Scott, Jonathan, and I discuss why they're returning some hedge fund capital to clients, how they've produced some of the best returns in credit, a business plan that gets Diameter to $30 billion, the key themes behind their trades, including ESG. Here's my conversation with Scott Goodwin and Jonathan Lewinson. You guys have built one of the hottest hedge fund businesses on the planet, and you've done it in credit, right? At a time of historically low yields, fleeting distress, zombie borrowers, all in the space of 4 years. How?
Well, I guess that goes back to 2010 when we first met. at Anchorage Capital. We worked together beneath Tony Davis and Kevin Ulrich and Dan Allen, who ran the firm. John's background is in research and restructuring, mine's in risk and trading. I think we quickly realized working together that combination of risk and trading and research and restructuring worked really well together versus his background in research and my background at Solomon City in just trading and risk. It was very powerful. And eventually we got to the point where we thought we could do our own thing. He had a little interlude at a different firm. But when I left Anchorage in 2016, we were ready to do it.
What we learned day one is we have very different skills. And we're in an environment where more and more everyone wants to say, you just do this. You do a narrow thing. And what Scott and I love to do is we love to look across the entire credit spectrum, from investment grade to new issue, stressed and distressed. And I come from a place where we tend to do lots of deep value work, thinking about restructuring. Scott came from a place where maybe you held positions shorter. And we realized that, and this is the pitch to investors that got us in business, that there weren't many firms, there are many great firms that do aspects of this, but there weren't a lot of firms that were offering investors a investment in credit. Some years it's investment grade, sometimes it's new issue, other times it's shorting, other times it's restructuring and taking over companies in one package that was large enough to be relevant to banks and advisors, but also small enough to be nimble. And that trading and research, by the way, the personalities don't always work. Sometimes traders and analysts don't like each other. We like each other. I think our pants are even the same color today. That was a key part of it, but offering that trading and research together has allowed us to not only pitch something that worked to LPs, but then make it a reality.
If I had gone to your clients, whether they're institutions, whether they're high net worth people, whatever, back in 2017, and asked them what they thought, I know what they would have told me. They would have said the last thing the world needs is another credit hedge fund.
Yeah. They did. In fact, the joke we made was the world would rather have I think a global epidemic, we said, than a credit hedge fund. So we should probably retire that now. But yeah, but that's what kind of made it work. What we're doing is a little bit of a throwback. We believe that there are inefficiencies in markets, in trading, and that if you are able to be native across these markets, you'll be able to more quickly understand where the dislocations are. And so in pitching that a little bit of a throwback and pitching a hedge fund, which in many ways was a dirty word. Today we manage a number of different products, but saying we're going to do that. We're going to provide you something that is not as volatile as the markets and that is more smooth. And in down markets, hopefully we do well. Was something they hadn't heard in a while, and we're lucky that some people took a chance.
Maybe we're a little bit more proactive and aggressive in terms of getting research done ahead of events versus reacting to the event and doing the research after the event. But it's combining that trading and research with speed, which we think speed is really alpha in credit. You have a discontinuous market structure. So how do you engage in a discontinuous market structure with speed? You have to know a lot of names. So we have a 20-person analyst team here that many of whom have worked with us previously that help us know a lot of names. And if we know a lot of names and we combine the risk and portfolio management functions, which is what we've done and that I do a lot of the trading as well, then we can react quickly when a mutual fund needs to sell a block of bonds. Because Fidelity or BlackRock or PIMCO, the big mutual fund complexes, if they might have an outflow and they want to sell, the banks are no longer bidding on a couple $100 million bonds. They're calling us or maybe one or two other counterparties that can react in 5 minutes because we have a proactive process where the research is done up front and we know the names. We can respond in seconds. We don't have to go through the junior trader, then the senior trader, then the junior analyst, then the senior analyst, the junior PM, the senior PM, layers and layers and layers and layers and layers of frankly bullshit, pardon my French, to make that decision. We can make it fast.
This is a new firm. We only started investing on September 1st, 2017. We have the benefit of taking our skill set and our team's skill set and kind of molding it for the current environment, for the current state of credit markets, for the post-Volcker world, and for the world now post-COVID. Part of what we think separates us from many of our competitors, even though many of them are great, is this combination of knowledge and speed. Speed of capital is really what matters. You don't have time anymore in an environment to sit for weeks and think about it. And in some degrees, you see private equity firms oftentimes wanting to get into credit when it's interesting. But their cultures are set up to be slow because they swing infrequently, and it doesn't always work. We've set up a culture that says, do your work ahead of time. Have a huge amount of work in the preparedness and less amount of process in the decision-making. And that, we think, works with our skills, but also is designed for today's markets and really builds on what we've learned from many people who have come before us.
If you look at how Tiger's disrupting venture with, frankly, speed of capital, or what's happening with Alrock disrupting private credit at speed of capital, So all these markets that have discontinuous liquidity, speed of capital matters because most people provide slower capital. If you can provide speed of capital with knowledge, not just provide speed of capital without the research, then you can have an advantage in an environment that's highly competitive.
Now you're returning some of your capital to clients and you're raising fees. How come?
So we'd always size constrain it. We'd close multiple times. We were actually closed when COVID started and we reopened and took money in. But now we're going to return about 10% of the capital at the end of the year, which will bring the fund into the $5 and change billion range from the mid-sixes. And we think that sets us up to grow into that capital base again. And if it happens again in the year where the market environment hasn't changed, we'll return capital again. We want to size capital to maximize returns on a risk-adjusted basis. That's something we've committed to our day one LPs. And in terms of the fees, we want to be competitive. We need a lot of people to run our strategy. And we're competing with people who have, frankly, much larger businesses.
Our business, certain of our strategies just don't work if you have to make massive investments all the time. And this idea, we want people to think about diameter. We want you to think about big enough to be relevant, small enough to be nimble. And the second we feel that nimbleness is compromised, we're not running the strategy that we want to run. It becomes someone else's strategy, and frankly, we wouldn't be as good at it. We have tests that we use, and like anything, it's quantitative and qualitative. Can we move 1% position quickly, long and short? Can we, partnering with banks and issuers on new issue is an important part of our business that we can get into. We don't like using leverage, and so we like doing a lot of new issue in bull markets. Can we get enough of that for the fund size?
Watch Bloomberg Surveillance to learn how to look at markets, how to look at trends, and how to look younger.
What do you think, John? Botox, or do I really need to get something done?
I think, Tom, if we just change the style up a little bit.
You think so?
Yeah,
you
drop
great.
The bow tie. Drop the bow tie.
What, skinny tie?
Yeah. I always say, this is my line, whenever anyone in America has to go at me about a skinny tie. The older you get, the wider it gets.
Oh, really?
Until it becomes a bow tie.
This is a bow tie.
Until it becomes so fat, you just sort of...
Some people I know are baffled by your returns. They say there's nowhere near enough ways in credit today to generate that much alpha, especially running as little leverage as you do. So what's the secret? How does the magic happen?
So, I mean, it's knowing the names first, right?
You really believe that is, well, that's a dividing line between you and others?
Everybody can know the names, okay?
But no, not everyone does.
But knowing them early and knowing a lot of them versus knowing them after they go down. Think about it. Most of credit is rules-based. You have investors who either have a ratings constraint, a duration constraint, or a liquidity constraint.
Mutual funds, for example.
Mutual funds, others, CLOs, right? We manage CLOs. They have tons of constraints on them, and we abide by those constraints. But if you have a universe of names you know, and then you can apply that to all markets, investment grade, levered loans, high yield, stressed, distressed, structured credit, at any given time. In 2011, it was Meredith Whitney blowing up the muni market, right? And be agnostic to where you go on a risk-adjusted basis and be fast because you have a trading mentality, that is in your portfolio management process, that's what differentiates it. And it's in this environment, like people are going to say again, there's nothing to do in credit, right? Diameter's returning capital, but there is stuff to do. We just think we want to size our core hedge fund product to do it well. What is there to do right now? Well, you had a pandemic, huge recession. A lot of companies did very poorly for 6 to 12 months. Now they're doing well. Some are having record earnings. Enterprise values are higher than they were pre-COVID. Those companies that were junked are going back to investment grade. There's an arb, because when you go from BB to BBB, the number of buyers, the universe expands exponentially. So if you own the company as BB and you think that S&P or Moody's is going to upgrade it, like Netflix is a position for us right now that we think will get upgraded, there are going to be more buyers of Netflix and those bonds will tighten. And maybe that isn't a money multiple opportunity, but it's a high IRR opportunity. Capital markets, there's record M&A right now. We have capital markets bankers calling us asking to lay off risk because they want to do more deals. So A, we can help them lay off that risk. We can participate in those deals, learn new names. Those are the opportunities, and credit dispersion was record lows first half of the year. Now it's starting to come back.
You looked skeptically when we said know the names. Why can't everyone know the names? It's an efficient market. You can't, think tanks don't work in finance. By the way, I don't know that they work that well in Washington, but that's again another story. Think tanks don't work here. So if you don't have a mandate to buy investment grade bonds or to buy new issue high yield bonds, you are not going to know them. If you don't have a mandate that includes shorting businesses occasionally, you're not going to know businesses that are in the decline. So when the crisis hits, whether it's oil and gas collapsing in 2014 or 15, or it's even at the end of 18, when there was a scare on interest rates and the market sold off, or of course the global pandemic that we went through. If you haven't invested in the names previously, you're not going to do it again, because what do people do? When you are afraid, when the market sells down, unless you're a total cycle, unless you're the guy in free solo whose brain is different than the rest of us, you're going to be afraid too, right? Because the market is trading off for a real reason. There is a global pandemic, okay? So you're not going to buy something you've never heard of. You're going to go back to what you know. But if you've only been looking at crappy companies, let's say that's your mandate, then you'll buy things that went from 75 to 50. We think oftentimes they go to 0. So it's our mandate of always looking at a lot of things, not having a think tank, always finding ways to invest in it with one team that allows us to constantly find what Scott talked about, the return available in credit.
What are you 3 years from now, 5 years from now?
Hedge fund, $5 to $7 billion. CDOs, $1 billion to $1.5 billion. Because there's a cannibalization effect there with the hedge fund, so we size constrain that business. CLOs in the U.S., 8 to 10. CLOs in the U.S., in Europe, maybe 2 to 3. Structured credit, long-only business potentially, that's a couple billion. And then we think about what's happening in markets, and we want to adapt our business. And we think that eventually private credit's a business that we'll be in. I'm not going to put a size on it. But we see what the private equity guys are doing. We're getting more and more calls from them, especially on second liens, where we've worked a lot with Thoma Bravo, for instance, to originate a second lien paper with them. We think that there's a real convergence in the credit space that we focus on, not the really small cap stuff, but mid and large cap, where we'll have an opportunity to be in that business as a complementary business to what we're doing elsewhere.
If I add all those numbers up together, it's big. I get to north of 20, maybe 25.
Yeah, 30, maybe. Yeah, we'll see. But you're only as good as your last trade. We got to keep making money in our core products first, and the other stuff will come along.
4.5 years ago, we were in a windowless room. We remember that every single day.
Have you thought out a strategy yet for private credit?
Whether we do it in a small scale or a large scale, we're still discussing, but it's a business that you'll see us in over the next few years because it's really synergistic with what we're doing, and we want to provide those capital solutions when companies come to us and they say, well, we want a private and a public solution. We want to be able to provide that, whether it's working with the banks or working with the private equity sponsors that we do a lot of business with.
And we want to know more names. And so it's not something that was on the page, though, to your point. 5 years ago in Bubbies, we're not thinking that way. The market is changing, that dynamic is changing. CLOs are growing like crazy, so there's people need public paper too, but that's why we're thinking about it.
You have to adapt, you have to be nimble, and the market's telling us right now that that's a business that we eventually need to be in.
I want to ask you about regulatory issues. Gary Gensler, the SEC chairman, is turning his withering gaze on corporate bond trading. He told senators he wants more efficiency and he wants more transparency in what historically has been an illiquid and opaque market. What could he do?
that to make the credit market look a lot more like the equity market would be a massive, massive overhaul. Doesn't mean that you can't do things to bring it closer and to protect investors who are today not being appropriately protected to the extent that exists. But I think it also highlights a really important difference. Scott mentioned it earlier. Credit investors are generally rule-based investors. You're looking at what's the rating, what's the industry, what's the geography. And certainly there are rules-based investors in equities to some degree, but it's such a different product. Equity markets forcing you to think so much forward-looking, whereas credit markets oftentimes are thinking, what were the last 12 months' earnings? That there are probably really good ways to reform credit, many of which we haven't even thought of, that don't necessarily say just copy what you see in equities.
You go long and short in the hedge fund. Do you think of shorting as a hedge or a source of alpha?
Shorting is controversial. My dad was an equity research analyst, and he used to say to me that shorting is un-American to some degree. He's an investor in the hedge fund now, so maybe he's come around. But we really believe that so much time, so much on television, is thinking about who are the winners, right? Who's going to have the best payment app? Who's going to have the best electronic vehicle? And a big part of what we offer investors in thinking about shorting is sometimes finding the losers is easier, and finding them before it happens in capital structures that are hard to move around. And so we really think that building our business to think about where is there technological transformation, where is there policy volatility, and where is there a lot of debt? First it was oil and gas led in terms of debt, then healthcare led in terms of debt. Now I think it's technology that learns in terms of issuance. Basing our business around that to learn those companies not only produces a return shorting, but we turn around a lot of times and then buy them later when they're at a lower dollar price and help fix the businesses or work with people to fix the business.
We've had too many shorts the past year. It's certainly been a drag on our returns. Our drawdown fund, which is long only, has done much better than our hedge fund. But we're starting to see price volatility come back. And maturities change things. So there are certain sectors we think, like airlines, have been zombified by what's happened over the past year with all the bailouts there. And some of those capital structures over time will have problems. There's nothing obvious right now. But you have to, when you're shorting, what are you playing for? Are you playing for a downgrade, earnings miss, a default, right? You have to know what you're playing for and size your position to be able to trade it accordingly. But right now, you're not playing for a lot of defaults. And we don't have a ton of shorts right now, and they're very concentrated in the industries and sectors that we think have been more zombified by COVID.
You believe in shorting. It's part of the capital market, right?
Yeah, sure.
Do you worry at all that the meme stock vigilantes could turn on credit players like Diameter and make you pay a Melvin-like price for having negative views?
It was something that no one thought could happen. It happened. And so we've now thought about it deeply and are more worried than we were.
Mistakes you've made or failures that you can talk about so that people could feel you're not just a superhuman.
People ask that question as if the only challenge is at work. Challenges come in a lot of different packages.
What are some of the big themes informing and underlying your trades right now?
The world is dealing with huge questions. but they're much longer term with a much broader array of outcomes. We're now learning that COVID is probably going to be something that is going to be with us in some form. We're learning that the vaccine efficacy changes over time, and you may need boosters or not. We are seeing that China is upsetting a lot of the expectation in markets as it changes some of its approach from economics to politics. We're seeing our politics at home. We may have a rerun of the 2020 election in 2024. And we have a central bank that has been really arguing since June to think about quantitative easing and rates and inflation differently. The problem is you don't get quick answers. Last year was unique. We got quick answers. All of those play out over 18 to 24 months. And I didn't even mention the fact that what happens to stimulus that the market is really addicted to if, for example, the control of the Senate changes in 2022. So what we think that leads to is a more tactical market, harder to sit there and say, I believe this. Also, 2 years of COVID, there may never be a new normal in terms of work from home and business travel. And so we're spending a lot of our time, looking at economic data. We're not macro traders or investors, but everything we do starts in what is the macro of the economy? What is the macro of the industry? What do we think about different types of consumers? How is spending going to change? Where is pricing going to really affect? And a lot of the themes we're focused on are how much of the inflation in goods is transitory versus real. We think generally that over time supply chains work themselves out, but that services inflation is much harder to give back because once you've raised wages, it's harder to go back. And so some of those themes, which we then apply to industries like airlines and commercial real estate and hotels, where we see paper available and see some distressed, that's how we go from that 30,000-foot macro down to the company, but it always has to start with a view on the economy.
Many in the markets are terrified by the prospect of a taper tantrum. Are you?
Oh, I'd love it. I mean, we might lose money at the beginning of it, but we have our watch list, we have our process. Each analyst is ready. We're disappointed there hasn't been one yet. And I think that would be a great opportunity for us.
Because?
Because what we'd rather do than do distressed or grind out returns in Netflix, getting upgraded, frankly, is buy really good performing risk at a discount to par. And taper tantrums, 2013, created an opportunity like that. It was there for maybe 3 to 4 weeks, and it was gone. We really like those opportunities. You had a loan market type tantrum when the Fed changed its policy at the end of 2018. Loans went down 5 points. We put 15% of the fund in loans in like 2 weeks. So we'd be excited for that opportunity set. But again, people have been predicting that all year, and it hasn't happened. So positioning for it, are you going to be positioned exactly right for it? No. And then you have to be able to change. So what does being able to change mean? We better run a low gross right now, which we are. Our gross is close to as low as it's been. We don't run a lot of gross because we have more trading velocity, and especially periods like now. We're sitting and being more patient. We're not patient people, but now it's kind of a time for patience.
Scott's excitement jumping off the page there goes a little bit to where we're different. So if you think about a taper tantrum, you're saying high quality bonds trade down. They don't go to distress levels. They go from par to 90, from 98 to 88. That would be an environment where big distressed guys would not be interested yet because these companies aren't defaulting. They're down for technical reasons. And they would look at the yield and they say, well, this doesn't hit my yield bogey. Whereas performing credit people might be having outflows because the retail market might react and say, oh, wow, bonds are going down, I want out. There are not a lot of, we've set up the firm to be at that intersection, to be able to buy the highest quality stuff when it's down, and that's represented by a taper tantrum.
You've committed to not invest in thermal coal, guns, and tobacco.
Yeah, no longs.
Why?
I mean, we're trying to respond to our investor base, which is, frankly, I think ahead of the curve versus the hedge fund industry on ESG. And we've got some really thoughtful investors that we're working with, not only in the hedge fund and the drawdown fund, but in our CLOs, which have even more stringent ESG policy so far than the hedge fund does. We don't think that we should be supporting and financing companies that have negative long-term impacts on society. And ESG is really interesting because it's probably going to be something that changes cost of capital for companies for the next 10 years. It's going to be a huge changer of cost of capital.
We'd love to say this is just driven by our moral ideals. It plays a role. But as Scott pointed out, the market is no longer going to provide capital to restructure these businesses. The number of regular way investors, particularly investors higher up in capital structures who don't want to take a lot of risk, they want to be able to say, I'm not taking a lot of risk, I don't have a lot of return, so God help me if I'm helping a company that's destroying the environment or doing bad things to people. So we think that we're getting trying to get a little ahead and saying, not only do we want to do the right thing, but the cost of capital is going to change dramatically for these businesses, and don't think about your old valuations when you think about some of these dirty companies.
And we're going to have to make our money shorting them because we're not going to be investing in the distressed when they go distressed.
But you're in the money-making business, right? As the cost of capital rises, the return to the investor in that issue, whether it be equity or whether
it keeps rising, right, keeps getting worse. A lot of the thermal coal, in many ways, people tried. They said, "Oh wow, look how cheap this is." Right? And then they realized there's just a whole generation of people who don't want anything to do with it. You're going through in Europe a little bit of an issue with power right now, and coal plants are slated to close in the UK, and you don't see a huge uprising. Say, what are we doing? The world has moved on a little bit. You can assume maybe that the cost of capital might change and go back down for some businesses, but for others we think it's a rise upward.
We are in a debt trap. It's not just fiscal dominance, but when central banks are going to want to essentially phase out unconventional monetary policy, given the debt ratios, there is a risk of a crash in the bond market, in the credit market, the stock market, and the economy.
We didn't want our story to be ended by Taliban. We wanted to continue the path that we started, to continue to go for our achievements and to go for having our dreams to reality. So that's why we decided to leave Afghanistan and go for somewhere safe. We are concerned that what will happen to our home then. Many people are leaving, but there are still girls who have dreams, there are still people who have dreams, and we want countries around the world to help Afghanistan to have peace over there, so that the girls over there can have the opportunities to continue their path as well.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Leaders from around the world convene in New York City for the UN General Assembly.
Distinguished delegates, please take your seats. The third plenary meeting of the General Assembly is called to order.
To discuss the biggest problems facing their governments.
I'm here to sound the alarm. The world must wake up.
When we meet the threat of challenging climate already ravaging every part of our world,
the world has entered a period of new turbulence and transformation.
We have an awesome power to change things, and to change things for the better. We have to choose. The world has to choose what kind of awesome we're going to be.
Welcome to a special report, Bloomberg New Economy, Leading Through Recovery. I'm Anne-Marie Hordern. World leaders gathered for the 76th United Nations General Assembly in New York City after going all virtual in 2020. Nations discussed and debated some of the most difficult challenges of our time: an ongoing COVID-19 pandemic, extreme weather events brought on from climate change, and growing economic inequality.
Challenges are not in short supply. Fragility, conflict, COVID-19, climate change, the list goes on.
We are on the edge of an abyss and moving in the wrong direction. Our world has never been more threatened or more divided. We face the greatest cascade of crises in our lifetimes.
In my view, how we answer these questions in this moment, whether we choose to fight for our shared future or not, will reverberate for generations yet to come. Simply put, we stand, in my view, at an inflection point in history.
We must show that we are capable of learning and maturing and finally taking responsibility for the destruction we are inflicting, not just upon our planet, but upon ourselves. It's time for humanity to grow up.
We must revitalize the economy and pursue more robust, greener, and more balanced global development.
We have brought forward from 2060 to 2050 our goal of achieving climate neutrality, net zero.
Korea will scale up its climate ODA and set up a Green New Deal Trust Fund with a view to supporting the work of Global Green Growth Institute.
China will strive to peak carbon dioxide emissions before 2030 and achieve carbon neutrality before 2060. China will step up support for other developing countries in developing green and low-carbon energy and will not build new coal-fired power projects abroad.
As leaders discuss curbing the environmental impact we as a civilization are having on the Earth, a devastating report by the United Nations showed that we can no longer stop global warming from intensifying, but we still have a small window to stop it from getting even worse. U.S. Special Presidential Envoy for Climate John Kerry said that China must move quickly to lower greenhouse gas emissions and turn away from coal power to limit the worst consequences of global warming. Kerry spoke with Bloomberg's David Weston.
There's been a lot of talk. What actually has gotten accomplished so far? What specifically has gotten done?
I think more countries are becoming aware they've got to step up their game before we go to Glasgow for the Conference of the Parties meeting. We also have had the United States, President Biden, put on the table a doubling of the amount of money that the United States will do in terms of the $100 billion total that has to be put together. China announced yesterday they will no longer fund coal externally in other countries. So people are taking steps. People are beginning to build some momentum, I think. The question is, will it be enough?
So, as you say, President Biden doubled the commitment from the United States toward the $100 billion. Is that enough? Because I've seen some estimates that say that actually it should be more like $40 billion should be the U.S. share toward that $100 billion.
Well, they doubled the doubling, and I think everybody understands that we have a complicated Congress right now. I think it's what the market will bear, but it's also a significant increase of the United States effort. I mean, President Biden is putting more, about $11 billion plus on the table, and that's an important contribution. Other countries need to also do their part.
Beyond President Biden's commitment of $11.4 billion, you also referred to President Xi having sent a statement to the General Assembly about coal-fired plants and stopping the export of them from China. How far does that go toward what you asked for? You asked him for that, as I recall.
Yes, we've been talking about that since way back in January when I first had my first meeting. This is one of the first issues we raised, is the need to end the foreign finance of coal, the foreign investment of coal. Why? Because as of yet, there's no means of really having clean coal, and it is the creator of the greatest amount of emissions in the world, unabated, as it is in many other countries. So the last thing we needed was any country that's going out and pushing new coal-fired power plants. We have some in America still. We have some nuclear plants in America still. We have 20% of our power in Massachusetts comes from nuclear. Nobody's saying close that now, or nobody, I think, absolutely rational with respect to what the choices are. But we cannot continue to pour emissions into the atmosphere, which only heightens the level of the damage being done. The best scientists have told us we have now about 9 years within which to make the critical decisions and implement them to avoid the worst consequences of the climate crisis. That's what we have to do now.
That was U.S. Special Presidential Envoy for Climate John Kerry, and other leaders at the forefront of this battle spoke to Bloomberg about the impact of climate change, including Alok Sharma, COP26 President, Greek Prime Minister Kyriakos Mitsotakis, and UN Secretary General Antonio Guterres.
We are on the verge of a disaster, and there is a risk of a failure for the COP26. If you look at the last data that was published by the Intergovernmental Panel on Climate Change, it was clearly stated that things are getting worse than what it was forecasted, and that we have truly a code red in relation to climate evolution. Either countries understand that we are on the verge of a disaster and change course, many of them, others have done a lot, and we have to recognize that, or we risk to have a COP26 that fails, and we need to face a catastrophic situation in relation to climate. And I believe that this meeting is a very important meeting for a wake-up call with heads of state and government of developed countries, to make sure developed countries are able to correspond to the commitment made to provide financial and technical support to developing countries, namely the $100 billion per year that should be provided. And also the understanding that the impacts of climate change are so devastating, namely in the developing world, small island development states, African countries, but even in the United States, let's be clear, the impacts are so devastating that we need to have half of the climate finance for adaptation to build resilience of the communities, and for the moment it's only 20%. So there are clear requests to developed countries, and also let's be clear, also emerging economies need to commit to more, need to be part of the reductions program. And until now, many emerging economies have objectives that are not ambitious enough.
The American forest fires are time zones away. You have a fire recently 13 miles, 18 miles from Athens. You are living fires. You are living record of heat. What do you need from Europe? What do you need from world leaders to jumpstart the climate change debate?
Well, first of all, this is really happening. I'm not talking about climate change. I'm not talking about the real climate crisis.
And the energy, fold it right into energy.
That is hitting especially the Mediterranean very, very hard. Now, we've put in place a very ambitious plan to decarbonize very quickly. And Europe is at the forefront of this effort. As you know, we have a commitment to be climate neutral as a continent by 2050 and to reduce our greenhouse gases by 55% by 2030. What are we doing in Greece? First of all, we're shutting down all our coal-fired electricity plants. We said we would do it by 2028. I think it will be possible to do it by 2025. So we are significantly contributing towards decarbonizing by changing our energy mix. Obviously, we're adding renewables. And in the interim, we are going to be dependent on natural gas. We're retrofitting our buildings at a very rapid pace. We are putting in place a very ambitious plan to encourage people to purchase electric vehicles. And all that is supported by European funds.
Here to talk about the most significant climate event since the 2015 Paris Agreement is the man behind all of the preparations, Alok Sharma, COP26 President designate.
Over the past year, I have spoken to well over 100 governments. I have made visits around the world, including to China. My friend John Kerry, of course, has also done the same. And I can tell you from all the conversations that I've had is that countries around the world recognize that climate change is a great leveler. It does not recognize borders, and they can see themselves what is happening in their own countries. This isn't just about something that's happening internationally. This is happening in the nations around the world. So they see the reason why we need to work together on this. When I was in China, I had a constructive but very candid set of discussions with colleagues in China, and I made the point to them that they have set out clear ambitions. President Xi Jinping has set out clear ambitions in terms of reducing the use of coal. He's set out ambitions in terms of carbon neutrality, getting to the point where they peak their carbon emissions. What we want to see are two things. One of the detailed policies that deliver on these commitments, and the second, and this is really important, are those commitments in the near term, the 2030 emission reduction targets that every G20 nation, indeed every nation in the world, needs to come forward with. But I think particularly the biggest emitters need to set those out before COP26.
Leading through recovery takes innovation while looking for solutions. Ireland's Prime Minister Michael Martin discussed how his country is dealing with climate risks with Bloomberg's Caroline Hyde.
Talk to us about net zero by 2050. Will Ireland achieve it?
Yes, and we've passed a climate law in Ireland, which sets very ambitious targets of reducing emissions by about 51% by 2030 and net zero by 2050. And that is a very strong commitment of ours across every sector. And by the end of the year, we will be publishing carbon budgets for each individual sector, from transport to agriculture and to industry. And we have to move fast as a country, and we have set very challenging targets, but we are absolutely determined with our European Union colleagues to achieve them.
Coming up, fighting the COVID-19 pandemic around the world.
What we need is a global vaccination plan. And to have a plan, we need to have leading that plan those that have power. And those that have power are the countries that produce vaccines.
That's ahead on our special report, Bloomberg New Economy, leading through recovery.
At the low point of the Greek economic debacle, what were you thinking about to make Greece recover as it has?
Well, Tom, we took over in July 2019 with a very clear mandate to make the economy grow again. We were hit by the pandemic, but we still managed to implement very significant reforms. And I think we used the fiscal room that was available to us to support the real economy. We're very encouraged by the recent data. The economy grew 16.2% in the second quarter of this year. We revised our forecasts upward to 5.9%, and this may be a pessimistic forecast for 2021. We see lots of interest for foreign direct investment by American companies, European companies. We're making big progress in digitizing the state. We have a very ambitious green transition plan. And overall, I think the mood in the country after 10 years of crisis has significantly changed.
How did you make the decision to move to the Bahamas of all the options out there?
We've been looking at the Bahamas for a while. They're one of the first countries to roll out any comprehensive regulation for cryptocurrencies, which we think is extremely important for the space and a really positive sign.
Welcome back to our special report, Bloomberg New Economy, leading through recovery. The World Health Organization urged leaders attending the United Nations General Assembly to guarantee equitable access to COVID-19 vaccines. The WHO said vaccinating 40% of every country's population by the end of 2021 and 70% by mid-2022 is achievable with genuine commitment to vaccine equity. Bloomberg's Tom Keene and Kayleigh Lyons spoke with the president of the World Bank, David Malpass, about COVID inequality.
It's $7 a dose to get a vaccine. Why can't we vaccinate Africa?
Yeah, this is on everyone's mind, and it's frustrating. The excess in the advanced economies. I'm chair of a task force that includes IMF, WTO, and WHO, and so there are 2.4 billion excess doses in the advanced economies. Wow. So the goal would be to have those early doses, the early deliveries, go to developing countries that can use those particular doses. You know, it's a hard logistics problem because you've got to get the dose from the factory to a country that wants that kind of dose. So some want mRNA doses, some want AstraZeneca, some want J&J, and so on down the list. And then they sit in a warehouse and they're not applied to people. And that, I think, has to be improved. We're urging, and the task force is urging, the advanced economies to allow a swapping of doses. So if they have a delivery scheduled into their warehouses in October of this year or November of this year, allow that dose to go to a developing country person and take a later delivery schedule because you don't need it. You've got excess 2.4 billion doses.
Yeah, David, it's an excellent point. We're having a conversation now about boosters here in the U.S. when there's many people throughout the world who have yet to receive their initial dose. Do you need the Biden administration to take more leadership on that?
Hi, Kayleigh. I think the world has to come together and find solutions to this problem. And the boosters countries are going to want to do that as needed in order to protect their population. That still leaves huge amounts of excess doses, even in near-term deliveries. What we're working on right now is trying to get November and December deliveries scheduled so that the countries can prepare to deliver that kind. You need a specific kind of cold storage or of trained personnel on each kind of vaccine, and we need much higher numbers of vaccinations in developing countries, and especially the poorest countries.
With the pandemic still spreading throughout the world, booster shots in wealthier nations have become a controversial topic. Ecuador President Guillermo Lasso, Austrian Chancellor Sebastian Kurz, and UN Secretary General Antonio Guterres says to solve the problem, we must come together.
What we need is a global vaccination plan. And to have a plan, we need to have leading that plan those that have power. And those that have power are the countries that produce vaccines or can produce vaccines if they have licenses and technical support for that, to bring them together with international financial institutions and World Health Organization, able to deal with the pharmaceutical industry and then solve the problems, intellectual property and others, and of course paying what is needed, because obviously the pharmaceutical industries are not philanthropic organizations, we know that, but to have a global vaccination plan which implies doubling the production capacity, which can be done. We see AstraZeneca produced in different places. I believe even Pfizer now made an agreement with a country to produce there. But this can be done systematically. Wherever there is a capacity to produce vaccines, vaccines should be produced. And conditions should be created for that. And doubling the production of vaccines and then having a mechanism of distribution that is equitable. That's what we need. Of course, we have all the problems that we mentioned and many others of the present situation, but these are all small aspects of a bigger one. And the bigger one is we cannot deal with this with vaccine nationalism or vaccine diplomacy, or we need to deal with this with a global vaccination plan and bring together all those that have the power to solve the problem.
But do you think there is something problematic about the booster shots that are now spreading throughout the developed world?
I'm not a technician, of course. If to have booster shots in one country means that others will not have shots, of course, this is not the best way to deal with the disease. If the booster shots are not used, and then the vaccines go to the as we have seen in many things, to the containers of garbage, then of course the problem is different. But the central question is we need a global vaccination plan. We need to double the capacity of production that exists today and to have a mechanism of equitable distribution, and those that have the power related to this need to come together.
This diplomacy started from a fundamental idea. Health has no ideology, and as soon as I won the elections, I met with the ambassadors of the US, China, Russia, and the European Union to address the need to obtain vaccines. And we were successful with the collaboration of the United States, China, and countries such as Spain, Canada, and even countries like Chile, with a small donation.
Unfortunately, we still have the situation that many countries do not have enough vaccines, so not all the countries are present here at the moment. And my main focus is still on the fight against the pandemic. I think we have to support all the countries in need through COVAX and other initiatives so that we are able to fight the pandemic worldwide and not only in the rich countries like the US, Europe, and some others.
Coming up, to fight the world's most urgent crisis, we must come together. But can it be done? That's ahead on our special report, Bloomberg New Economy, leading to recovery.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kayleigh Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
We're not seeking, say it again, we are not seeking a new Cold War or a world divided into rigid blocks.
It's not the time to blame the others. It's the time for everyone to do everything possible to assume their responsibilities.
I'm confident the United States and China can reach agreement on some tricky economic issues. We've done it previously. I'm sure we can do it now, and we've got a good team poised to have those discussions.
We're now joined by Bloomberg New Economy editorial director Andy Brown. Andy, we heard from Biden talking about we're not on the brink of this Cold War, and he said, let me say it again. But many would disagree.
Well, it certainly looks as though we're on the brink of a Cold War. The sale of U.S. nuclear submarines to Australia recently, I think, demonstrates that the U.S. and China are locked in geopolitical competition right now. And I guess one of the big questions is whether or not they can transcend that competition to work together on some of these big existential issues, of which by far the most important is climate change, but also control of pandemics.
And Bloomberg will be hosting the New Economy Forum in Singapore. What's the expectation?
It's interesting that the conversations that have been swirling around New York during United Nations General Assembly Week are very similar to the kind of conversations that we're going to be having in Singapore. And fundamentally, these conversations are linked to the whole issue of a collapse in global trust as a result of the COVID pandemic. Mm-hmm. Trust is at an all-time low, and that's the implication of some of the comments that we just heard from global leaders, including the United Nations Secretary General. Trust between the developing South and the industrialized North, trust among countries, trust in global institutions, trust by populations in government to do the right thing when it comes to climate change. And, you know, one of the most dramatic, tragic manifestations of this absence of trust is the fact that, yes, we are talking about booster shots for vulnerable populations in rich countries. when you have a continent the size of Africa that is still largely unvaccinated. That's the kind of gap that leads to this shredding of global trust.
An absolute deficit. And the WHO wanted to put a moratorium on boosters until there was higher numbers in these developing world. So how do we fix it?
Well, that's the topic of really, that's the theme that's going to be running through our deliberations at the Bloomberg New Economy in Singapore. And we're going to be looking at it through the prism of supply chains, technology, of global institutions, of data, the capital markets. The most importantly, to get back to this trust issue, how do we rebuild international trust? Look, you know, in the absence of trust, absolutely nothing gets done. So, you know, bringing together leaders from developing countries and developed countries to talk about this problem, to reestablish habits of cooperation, to figure out how you can get the world collaborating, uniting against climate change, that really is the essential work of our forum.
Andy Brown, thank you so much for your time. You've been watching a special report, Bloomberg New Economy, Leading Through Recovery. I'm Anne-Marie Hordern.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
We have a surge in demand. As you know, we had a lot of fiscal support, and that's, you know, we've passed the peak, and that means it will also fade away.
This is my kitchen table and also my filing system. Over much of the past 3 decades, I've been an investor. The highest calling of mankind, I've often thought, was private equity. And then I started interviewing.
Well, I watch your interviews because I know how to do some interviewing.
I've learned in doing my interviews how leaders make it to the top.
I asked him how much he wanted. He said $250. I said fine. I didn't negotiate with him. I did no due diligence.
I have something I'd like to sell.
And how they stay there.
You don't feel inadequate now because being only the second wealthiest man in the world, is that right?
When I was a young staffer on Capitol Hill, I met a man named Stephen Breyer, who was a law professor at Harvard. I thought, very smart, he'll probably be an academic the rest of his life. But actually, he became a justice of the Supreme Court and has been in that role for 27 years. I recently had a conversation with him about his future and about the future of the Supreme Court. I have to start with the question that's on everybody's mind, obviously. Why is this book that you've just written so small? It's a very small book, and I'm used to bigger books. So why is this book so small? I mean, why didn't you get a bigger book?
This is the Constitution, and it's smaller.
Okay, all right. A lot of justices of the Supreme Court carry around the Constitution all the time. Is that because you're going to forget what's in it, or are you... You just like to remind people, or you just read it over and over again?
You never know when somebody's going to ask you a question. You see, somebody says, what does Article 3, Section 19 say?
Okay.
And they expect you to know.
Okay, so you have
So you have it here. Yeah, there it is.
There it is. So your book, this book is a interesting book in the sense that it came from a series of lectures you gave, named after somebody who was an ideological, let's say, opponent of some of your views, and that was Justice Scalia. So were you a friend of his, even though you had ideological differences?
Yes, I think so. We would debate those differences, and we'd go. I thought we had a terrific debate in Lubbock, Texas. There were several thousand students who'd come. They'd never seen a Supreme Court justice, and we talk about our differences. You know, I say, hey, if I had your theory, my goodness, do you think George Washington knew about the internet for free speech? Do you think he knew? And Scalia would say, I knew that. Well, yeah, good point. Then he would say, I'm not saying my theory's perfect. He would say, you know, the two hunters, they're hunting bears, and one's putting on his tennis shoes. Where are you going? And he says, bear's coming. He says, you can't outrun a bear. He says, yeah, but I can outrun you. Right. See, that was his view of my way of deciding cases. And of course, I never, and I still, 28 years now, I've never heard a voice raised in anger in that conference room. I've never heard one justice say anything mean or even snide
at the table or anything like that?
What good would that do? I try to explain that to the students. You know, you get all excited, and all that happens is people disagree with you, think, well, you know, he's all excited, he must be wrong. And that's so true. So we get on well personally, and we're friends personally, and we disagree on some things. Not as many as you think, but some.
It's not always been the case. There was a Supreme Court justice who refused to talk to or be in the presence of Justice Brandeis. Because he was Jewish.
McReynolds.
Right. So it hasn't always been that friendly, but you're saying right now, since you've been on the court 28 years, people don't yell and scream at each other.
And they don't insult each other, and they're not rude to each other, and it's a professional job, and you go in and do your best professionally. And if you want people to listen to you, the best you can do is to think through this problem. Listen to where the other person is coming from, and see what you can contribute to that thought.
But sometimes the dissents are a little bit tough on the person who wrote the majority opinion. Nobody takes that personally?
I get that question a lot, and I used to get it more when Nino Scalia was on the court. And the two of us would be there, and somebody would ask that question, and I'd try to answer it because I didn't want him to. And I'd say, look, I know you're not aiming that question at me. You're aiming it at Nino. Okay, I get it. But what you don't understand is that some people suffer from a disease. It's called good writer's disease. Okay. And if a good writer finds a felicitous phrase, he won't give it up. Let him destroy himself, let the world come to an end. It's like a good comedian. You can't give up that joke. Now, that's Nino. He is a very good writer. He has a felicitous phrase, and we all know that, and we don't take it personally.
Do you have a lot of unanimous decisions these days, or they don't get that much attention? And do you really have a lot of 5-4 decisions, and they get all the attention, it seems? But is that where the court really has its arguments with each other, the 5-4 decisions? And
no, not necessarily. What you read about are the ones that the press thinks the public will be interested in, which usually has a political or a social content. And they'll say, that's the most important. I don't know. One of the most important decisions I wrote this last year was called Google versus Oracle.
Right.
And it took a year for me to write that. It was about copyright and something called programs, interface programs. And I was told that that was very, very important. Well, for me, it was like learning Latvian. I mean, I don't know how I did that. But you see, I'm not saying I see what they're saying. I see what they're saying. And it's true that a lot of the sort of exciting cases are more close.
But do the justices, let's suppose you have a decision, it's 5-4, and one justice kind of go to another justice's chambers and say, you know, your argument isn't so good, and maybe you should do something different, or is everything just done by memos and writing? You don't have people going down the hall and saying, let's have lunch together, and maybe I can persuade you my position is better than yours. Does that ever happen?
Most of it is memo, but quite a lot can be visits to chambers. But if I'm going into your chambers, I'm not going to say, no, your argument isn't so good. This would not be a helpful way to start the conversation. And if you go into somebody else's chambers, you better be prepared to listen to them, as well as hoping that they will listen to you. And then you try to see, and that's what I learned in the Senate, that's what you try to see is, where is there some common ground? And is there common ground enough that you can work with it?
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Let's go back to your earlier life. I worked on Capitol Hill, and you worked briefly on Capitol Hill. You were a Harvard Law professor. I'm just curious, when you go to Harvard Law School and you're at the top of your class. When you start Harvard Law School, there's always kind of an intimidation factor. You have 600 people. You have to figure out, are you going to be good or not? When did you realize you were really good at law school kind of things, taking exams? Did you know right away you were going to be a great law school student and therefore become a potential law school professor? Or were you nervous the first year or so?
I think I was pretty nervous. I mean, I remember talking to a friend of mine I'd been an undergraduate with, and he was there too, Paul Dodick, actually. And we both said, well, this is the end of our great careers. That was after our first year. And we both did pretty well in law school.
So you were in the Harvard Law Review, and when you're on the Harvard Law Review, sometimes you get to clerk on the Supreme Court for another justice, and you clerked for?
Arthur Goldberg.
And what was that like?
It was terrific. He was great. He was an enthusiast. He had loads of energy. Jack Kennedy said that he was the smartest man he ever met.
So you clerked for him, and then you went to teach at Harvard Law School.
That's right.
And when you went to Harvard Law School, did you say, this is going to be my life? I'm going to be a professor, nothing terrible about that. You can teach great law school students and so forth. Or did you say, maybe someday I'll be on the Supreme Court, maybe I'll be a judge? Was that in the back of your mind?
I didn't think maybe someday. Anybody who thinks maybe someday I'll be on the Supreme Court, I mean, I don't want to say there's something wrong with him, but there is something wrong.
So after teaching at Harvard Law School, you got a very good reputation. Senator Kennedy invited you to come down and work on his staff, I think to work on regulatory reform.
Yes.
And that's where I first encountered you, and I was working on Capitol Hill and so forth. You've got a very good reputation. And then something happened that was a surprise to people. President Carter nominated you to be a judge on the First Circuit. And that's not a surprise given your reputation and so forth. But it required a Republican to sign off on it, Strom Thurmond, one of the most conservative Republicans. Why did you think Strom Thurmond said he would let a presumably somewhat liberal Harvard Law professor get on the First Circuit?
I mean, those were days. It was a different day. You remember that. People did try to work together. Right. And every single morning, Ken Feinberg, who was like, I was chief counsel and he was a general counsel or something of the Judiciary Committee, and we would have breakfast with Emory Sneeden, who was a former JAG general, and it was Strom Thurmond's chief person on Judiciary, and we would plan the day. We planned out the day. We wanted no secrets. We wanted to try to accomplish something. And we'd figure out how do we color it red for this party and how do we color it blue for the other party. But the important thing is, if it's desirable, let's try to get it through. That happened a lot. I can't say there was no conniving, but Ken and I and Emory used to call what we did open conniving, openly arrived at.
Okay. So you went on the First Circuit and you had a very good reputation there. And then you were being considered to be on the Supreme Court. And so you came down for an interview with President Clinton, but you had a bike accident and you had a lot of injured bones, if I recall. So did you think that was bad karma, that you had this accident before you had the interview? And did that affect your ability to do the interview well, or it didn't make a difference?
I have no idea. I mean, that's the truth of the matter. And later I thought about it, and of course the newspaper people wanted to say, weren't you terribly disappointed, da, 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 da. And I said, I'll tell you why. I said, well, you know, it's not such a terrible thing in your life to be seriously considered to be on the Supreme Court, even if you're not appointed. And that's about the best you can do. And I was thinking partly I said that because it's true. Okay. And partly I said it because I did have children. Hey, my friend, you don't always win everything you want. And my goodness, what you want those children to learn. And you want them to learn, fine. Sometimes you'll get everything your heart desires, not very often. And sometimes you won't. And you better be a good sport about when you don't, as well as when you do.
Well, Mick Jagger has a song about that. You can't always get what you want, and so
right.
You didn't get it.
That's after my generation.
Okay. So Justice Ginsburg was appointed first, but then you were appointed next by President Clinton. Yes. So when you got on the court, how had it changed from when you were a clerk? Was it much different, and were you surprised by the changes?
Yes. I thought it was different in this respect when I clerked. I felt it was a court with a mission. What mission? In 1954, the court had decided that Plessy v. Ferguson, rightly, was down the drain. And legal segregation is contrary to this document, equal protection of the law. They said it in 1954, and we both know what happened in 1955, nothing, right. Next to nothing. 1956, yeah, double nothing. 1957, a rather brave judge in Little Rock said those Little Rock those 9 brave black students are going into that white school, Central High School. But the governor, Governor Faubus, said, maybe those students have a court order, but I have the state militia, and they're not. And Eisenhower, I'd like to see that at the monument that they're building for him. He called in 1,000 troops from Fort Bragg, the 101st Airborne, and they took those 9 black children and walked into that white school. No. I'd like to say that's the end of the story. But it wasn't. What happened was after a few months, the troops had to withdraw. And when that happened, the school board said, we're not going to integrate anymore. And when that happened, a very famous case went to the Supreme Court, Cooper versus Aaron. And when that happened, all 9 justices signed the opinion saying, integrate now. Do it. Right now in Little Rock, hey, but there are 9 people. Maybe there could have been 900, maybe 9,000. Faubus closed the school. That's what happened for those of us who remember and those of us who don't. But they couldn't keep it closed because that was the era of Martin Luther King, the Freedom Riders, and suddenly the North woke up. And others woke up and said this is an intolerable situation, and eventually, through a lot of work, and a lot of moral effort, and a lot of physical effort, and a lot of organizing effort and so forth, eventually, legal segregation was brought to a conclusion. And the reason that I find that story important, and I told that story to a woman from Ghana who is the Chief Justice, who is trying to improve the constitutional system there, and asked me, why do people do what you say? And my response was, ma'am, 301 million people in this country, and 300 million are not lawyers. That comes as a surprise. And those are the people you have to convince. Convince what? Convince that they should try to follow the courts or the rule of law when they don't like it, when they think it's wrong. And that's why I wrote this book. A country that can use this weapon called the rule of law in order to prevent some pretty terrible things.
What would you like most people to know about the Supreme Court?
A judge is there for all Americans.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I am waiting eagerly for that ultimate approval so that our children can get vaccinated, so that we can do all we can to navigate through this COVID-19 pandemic.
Let's talk about what's called the shadow docket. For the people who are not lawyers, what is the shadow docket and why is it becoming such a big thing?
What it is that in between hearing the cases on which we have decided to hear, someone will make an emergency motion. Now that's what it is, an emergency motion. The country is divided. I'm in charge of the First Circuit, for example, but everybody's in charge of some circuit. So if there is a litigant in the First Circuit who believes that he needs immediate attention to issue an injunction or to stop an injunction, well, then he'll file it with me, and I'll look at it, and if most of them there isn't much to. And so it's easy to deny it. But some there is something to. And then I usually will refer it to the whole conference. And if I should have and didn't, he can go to any other judge and it will be referred to the whole conference. Most of these that are the subject of the whole conference are death cases, and at the very last minute. Because of COVID, I think, there have been some recent cases which did not just involve the death penalty or something that wasn't too difficult. And there I thought I was in the dissent in those cases.
Well, the most recent abortion case.
I was in dissent. I thought it was wrong, and I thought we should have heard the whole thing. It was a procedural matter. They didn't decide the substance of the statute.
But there will be a case presumably working its way up to the court, but it might take a year or so for a...
Well, there is a case in November where that's the subject matter.
You've been on the court now 28 years. What are you most proud of having done, and what's the pleasure of being on the Supreme Court?
It's a great privilege to be on the court. I mean, there's no doubt. And from a personal point of view, I'd say it requires you in middle age, when you get there, to give your best to this every minute. And you say, is that a big virtue? Yeah. And the older you get, the more you see it as an enormous virtue.
Einstein famously said, if you try something over and over again and expect a different result, that's the definition of insanity. So if somebody asks you a same question over and over again, expecting a different answer, I guess that's the definition of an insane interviewer. But let me ask the question you've already been asked many, many, many times. I know you're not going to give a different answer, but I have to ask you the question, what is your thinking about all of the issues relating to your retirement?
Yes.
Okay.
Einstein was right.
Einstein was right. Okay. So you have said that you don't want to die on the court, and presumably nobody would want you to die on the court. So what do you...
It's Einstein is coming back.
Right. So what is it that you would like to do when you are alive after you're off the court? In other words, would you like to go teach again? Would you like to write? Would you like to just take life easy? What would you like to do?
It's hard to take life easy, but I don't know. We'll see.
Okay, so you haven't thought about what you might want to do? Or
no. Different thoughts
things
go through my mind.
President Biden has put together a commission that's going to look at the court, and you have already articulated your view that you don't think expanding the size of the court is a wonderful idea. I think you've said that.
What I've said is that they better be pretty careful about it, because two can play at that game. And of course, what's worrying me, and I say this, I try to explain to people in the book the extent to which politics is relevant or not relevant, or present or not present, and in what form in the work of our court. And what worries me is that people will think we're junior league politicians. And if they think that, the second thought should be, why don't I have a senior league politician? And once you begin to think along those lines, you can play at that game, as I said. You could have Republicans appointing and then Democrats appointing and vice versa. But I see the overall tendency of that is, given the history, given the way we work, given the country, etc., as weakening the confidence of the average person in the decisions of the court. And you can say, what's wrong with that? And I say, well, that's sort of a step towards or away from a rule of law.
What would you like most people to know about the Supreme Court? If you could say to the average citizen, here's what you should know in a paragraph about the Supreme Court. I assume, it would be something along the lines that it's not as political as some people think, but what would it be you would say?
A judge, once he puts on that black robe, I'm not going to say it's a midnight transformation, but look, a judge, and I have to think this about myself there too, I have to. A judge is there for all Americans. He's not there just for Democrats. He's not there just for Republicans. He's not there just for the president of the party that appointed him. And even if half the country thinks he's a real idiot and they can't stand what he writes, in his own mind and the way he approaches the job, he has to remember he's there for everybody, all 331 million.
U.S. Open tennis champion Emma Raducanu's 3 dream dinner guests?
Daniel Ricciardo, Michael Jordan, and Tom Keane from Bloomberg.
She understands you?
Funny and very understandable.
I am reading in on tennis like nobody.
Yeah.
Champion approved Bloomberg surveillance. Mornings on Bloomberg Television and Radio.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
How is Ireland dealing with that blackout risk, those energy prices spiking?
Well, in the first instance, we will manage it over the next while. I think the key agenda item for Ireland on the energy front is wind, and we've been great developers of onshore wind. The next decade in Ireland will be offshore wind, and we have streamlined our planning application framework for investors so they have certainty in terms of applying to invest in terms of offshore wind infrastructure in Ireland. So that will be a key agenda item of ours. And renewables. We have a very strong climate component in our government and in our government programme. And that, of course, is not disconnected from the energy agenda. And there will be challenges of that, there is no doubt, but we are making considerable progress.
Are you worried about the here and now? Are you worried about blackout risks? Are you worried about the amount of consumption data?
Data is taking up considerable demand in energy terms, but we have been robust in terms of meeting that to date.
He was born in Russia
emigrated to Canada with his parents at the age of 6 and had already mastered multiple languages, mathematics, and engineering by the time he got to high school. At age 17, his father introduced him to Bitcoin. He couldn't afford to buy it, so he wrote about it instead. And while he found Bitcoin fascinating, he felt like he had an even better idea. In 2013, Vitalik Buterin wrote the original white paper that conceived Ethereum, not just a digital currency, but an entire network built on the blockchain. It's now worth more than $300 billion, and the biggest believers claim it will send the rest of the cryptocurrency market into the ether. Joining me on this edition of Bloomberg Studio 1.0, the inventor of Ethereum, Vitalik Buterin.
We're going to talk about Ethereum, but I want to start first with how you got here. You were born in Russia, you emigrated to Canada with your parents when you were just 6 years old, and you started learning about Bitcoin from your father. What is it about Bitcoin that hooked you both?
Bitcoin is really interesting because of how interdisciplinary it is. I was very interested in math and computer programming and cryptography and technology. I was also very interested in economics and kind of politics and philosophy. And Bitcoin just happens to be this interesting fusion of all of these things, right? And at the same time, it's not just a piece of code that's there for fun. It's not even just an app. It's something that's really intended to have a very big and meaningful impact on how the world works. And so I think just having both of those aspects together definitely made Bitcoin very interesting to both me and my dad.
As I understand it, you didn't have enough money to mine, so you wrote about it instead. And in 2013, you wrote the original white paper that became the basis for Ethereum. What was it that sparked that original vision?
So I joined the Bitcoin space in early 2011, and I wrote that Ethereum white paper at the end of 2013. That was the time when things first blew up, and it was clear that this was something that's significant, right? I remember going to the Bitcoin conference in San Jose, which had about 1,000 people in it, and that was when I realized that, hey, this isn't just a bunch of weirdos who only exist on the internet. This is real. There's people trying to actually do things. There's people building businesses, a lot of which are actually pretty successful. What started happening then was people started thinking, well, we have Bitcoin, what next, right? So what else can you do with blockchains? What would Bitcoin 2.0 or cryptocurrency 2.0 look like?
As I understand it, it wants to be a whole new operating system, like a new Apple iOS, with a ton of apps built on top of the blockchain. In the simplest terms, what is Ethereum and how is it different from Bitcoin?
So Bitcoin is a blockchain that's designed for one application, right? Which is maintaining and letting people use Bitcoin, the currency. Ethereum is a general purpose blockchain. So instead of being a blockchain that's designed for one application, Ethereum is a blockchain that supports a built-in programming language, and whatever blockchain application you want to build, you can just write the logic of that application in the programming language, upload that program to the chain, and this becomes what we call a smart contract. And anyone can then interact with your application, and the blockchain interprets the rules of your application for you. So instead of being something that's designed to do one thing, it's designed to open up space for creativity to basically let people do whatever thing that they want to do on top of it.
So is the idea then that the next Facebook or Twitter would not be owned by Jack Dorsey or Mark Zuckerberg, but be built on the blockchain and owned by everyone?
There are multiple projects already trying to do that, and lots of them are based on Ethereum, so yes.
So then is Ethereum a threat to established, centralized companies and social networks like Facebook, like Twitter, like Google?
I think it can be a threat, but it can also be an opportunity. I think even Jack Dorsey himself, right, he has this project called Blue Sky, which is trying to figure out how Twitter can kind of incorporate decentralized elements. And I think a lot of these projects want to actually do this, right? Because I think a lot of them are realizing that being a kind of centralized focus of power and having control and of so much of everyone's data and all of these things, like it's not just an asset, it can also be a liability as well.
Now, we still don't know who Satoshi Nakamoto is, whether that's even a single person or a group of people. What is it like to be a known and visible figure behind such a popular technology?
I mean, there's definitely times when I want to be less visible, but I guess that comes with the territory.
Why do you want to be less visible? I mean, one of the other Ethereum co-founders, Anthony DeLorean, recently announced he's quitting crypto because of safety concerns. I mean, is that part of your concern as well?
I mean, it's not so much physical safety per se as just like wanting the ability to also, have a life and not just have like random people running up and saying, "Are you the Vitalik Buterin?" I don't know. There's definitely times when I find such things annoying, and so I don't know. I'm likely to keep wearing my mask in lots of places, and that has nothing to do with COVID.
There was a lot of debate early on about what Ethereum could be, would be, should be, for-profit, non-profit. Non-profit won out, and I know that was really important to you. Why did you want Ethereum to be a nonprofit, and how did you come to that decision?
It was just very important to me that this is a technology, that decentralized infrastructure that's meant to be not controlled and not owned by anyone. And it's a platform that's for the world. And so for that platform to be connected to a company that had a very small number of shareholders, I think is something that could really centralize the ecosystem, and so something that I thought would be very unhealthy and wanted to really avoid.
Now, NFTs in particular have really helped bring new users into the crypto tent. We saw you at Ashton Kutcher and Mila Kunis's kitchen table.
What's Ethereum?
You also were not happy about Kim Kardashian getting involved, and I'm curious, where do you draw the line when it comes to celebrity endorsement?
The thing that I was unhappy with about Kim Kardashian was that she basically shilled something like Ethereum Max that was I'd call it a borderline scam, right? It seems like this project that's basically just at best a pure money grab that's not really providing much of value.
Ethereum has had some growing pains. Why do these problems exist?
This entire ecosystem has blown up and gotten big fairly quickly.
Impact China's growth because it is already slowing. Chinese manufacturers are curbing production. This is the latest shock to global supply chains, already delayed by, part delays, chip shortages, saddled with soaring commodity prices as well.
Well, Haslinda, when we've seen a lot of supply chain disruptions at the beginning of this COVID pandemic, and then, supply chains became resilient and it really moved goods around, especially medical goods and supplies. But now, at this part of the pandemic, we are seeing disruptions again, and